Good morning. It's Monday, August 14th, 2023, and I'm Jared Hall with Harvest Investment Strategies, and you're watching The Week Ahead, where every Monday we update our clients and network on what could be impacting financial markets during the week. In our last video, we briefly discussed the U.S. credit quality downgrade by the rating agency Fitch's. Since that downgrade, we've seen interest rates on Treasury securities move higher as investors require greater returns on their investments due to the slightly increased risk factor. The drift higher in rates naturally tightens credit markets for companies and sometimes coincides with the haircut in equity prices, as investors may be more apt to just buy higher yielding bonds over taking the risk of investing in the equity marketplace. Last week, the market continued its second straight week of declines, finishing down about 0.3%. The losses were led by technology, materials, and consumer discretionary companies. On Thursday of last week, we also received the July CPI report showing that prices increased by 0.2% over the month of July, matching the expectations, and that year-over-year inflation came down only 0.1% to 4.7% annually. This is still well ahead of the U.S. Federal Reserve's 2% target. Nevertheless, the odds of the Fed hiking at their next policy meeting remained below 12%. This week, the market will be focused on retail sales and earnings from major U.S. retailers. We will find out just how resilient the consumer has remained through the second quarter of the year and hear from those retailers on if they think this strength is waning or can continue through the second half of the year. Thanks for watching this week's video and following along. We'd appreciate it if you'd share some of this video on your social media. Thanks.